then it indeed can get volatile. So let's keep an eye on that. To first go over the price action a bit, I don't really like this as a range, but basically we have, on Monday we had that retest of the range high where we sold off, took out all this sell side liquidity, aggressive move down, had that local range right here where we SFP'd it during Tuesday, New York, and then broke upwards, and since then price has basically been super choppy and just been hovering between these levels with our weekly high right here and our weekly low right here. So a lot of chop, and yeah, as I said yesterday, I was not interested to get involved because we're at FOMC, and also happy to have followed the plan, because if you look at this chop, it makes no sense to trade this, especially not with a news event. That is just, to me, this is just gambling if it goes up or down. So if I would have traded, I probably would have lost money, so I'm happy I did not do it. And for now, basically the same. You guys know what my setups are, on which I focus. Right now I simply do not see it. The only potential trade I see is, depending on how we react, is potential shorts, because we just took out these two like kind of equal highs, which were also poor highs. So this has now been cleared, and if we flip back below it, then I might look for shorts, but it fully depends on what we do. Normally I rather just get like a range to work with, so I'm not too eager to get into trades. Other big POI I have is basically this local liquidity, and then with this supply zone right here, which was left behind on that drop from Monday. And it is also, if we watch it here, a naked daily point of control. So we know that daily point of controls are very big magnets for price. Only if we look at it right here, then with that drop on Tuesday, we took out a naked daily point of control right here, and then we started pushing upwards again. So here it was cleared, we pushed up from it. Then we have left behind one on Tuesday, which we took out yesterday after FOMC, and then pushed up again. And currently we have two point of controls. Basically the one above us, which is from Monday, left behind. So if price moves towards that level, that is a big level to watch for reactions. And currently for today we are also building one, which is untested. So because I think, until proven otherwise, I see this simple as our range high, which is, until proven otherwise, being defended by the bears. I'm going to be pretty interested if we move into that daily point of control, this level right here. And if bears then again step in and we break structure locally, then I'm interested in potential shorts here to simply move back to the daily point of control below us, which is basically around here, current daily point of control. That's basically the only trade I see right now. Other than that, I think we are likely to continue ranging here. But yeah, I only like to trade like when it's obvious. Right here it was obvious, right here it was pretty obvious. Here it's not really obvious to me, and we also have news incoming, so I rather wait, because I know eventually it always becomes obvious, depending on what it does here. Maybe it comes back down and then it retests it here, and then I think, oh, maybe this is like a redistribution, target this low, and then I want to trade. But the mistake I made a lot in the past is to front run that and now already position myself, and then you are a long time in a position that goes all the ways, and then eventually you look back and think, oh, if I just would have sit out, and wait for price action to tell me more, then eventually it's always obvious in hindsight. But the urge to always be in the trade is super strong, so I know that as no one else. But now I am like 98% just a spectator and 2% involved, and it works for me much better. So main POI right here is this supply zone, and it's also a really big POI, because if we flip above this level and can hold it, then we technically have a reclaim of the range right here, because bears slammed it down right here, they slammed it down right here. So if they want to hold the range high, then after deviating it to the upside, you normally never want to see it reclaim the range again, because it makes no sense if you have a deviation to get a range reclaim. And that's also why we saw bears here stepping in, So if they want to step in again, they should do that soon, or we simply have it's also the flip confluence. So we have the anchored VWAP from the high, from this manipulation high, where the price is currently at. We have supply from this wick. It's also the daily point of control of Monday, and it is 15 minutes supply, and it is a level where the FIB levels align. So if bears want to step in, they should do it here. If we shoot over it and break above this level, then I could see that we retest this level and then go to new highs, purely because there's no reason to get acceptance above your range high if we are indeed continuing to range. So very interesting level coming up here, but until proven otherwise, I'm still feeling more like this is the more likely. And Bitcoin always likes to give deep retraces to make you change bias and stuff, but very often it goes deep and then it can still go down. So let's see what happens. I'm currently not in a position, so I don't, even if we start to push hard, then I'm fine and I'm gonna switch to longs. So it doesn't matter to me what happens, but feeling more like potential shorts. However, as I always say, the way you move into the level tells you everything. Right now we are showing quite a lot of strength, so then I'm not too eager to get into shorts yet. At least I want to see this level be lost again, and then get like some sort of PO3 kind of setup. End of the month, end of the week. Yeah, indeed. It's so monthly close is also often when the market can get a bit more unpredictable, because the monthly close is where big players want to sometimes manipulate it to close the monthly candle at a certain price. So always end of the month and the first day of the month, first 2 days, I'm also more careful. So then if I do not see a super clean trade, I'm fine with sitting it out. But let's see what we locally have, because I want to see if we tap that level. We have not tapped it yet, so it is at 65,170. Oh yeah, here we can see it. It's the red dotted line. I'm not sure if you guys can see it, but that's the level. So put an alert there. If we take that level and then get a reaction, hopefully break structure locally, then I might look for a short. Kind of playing the here the local PO3 manipulation above. If we break back below it, I think we can target this liquidity and even this. And also because this is simply part of that range I've been playing each time at short from here, short from here. So if we continue to range, this is like an inflection point. So basically the highest probability short you can get is here. Either we reject from here and we go down further, or the bearish idea is simply invalidated and we reclaim the range high and go to new highs. So those are always levels I really like to trade, because the invalidation is super clean. Either bears step in here and we go down, or the bears have lost and bulls are in control. Let's see, we do not have like solid structure. We left behind some. Let's quickly look. Yeah, so here we have 4-hour demand to keep an eye on. Here's some local demand. Put an alert. Basically this whole zone. Yeah, so simple plan for today. I'm not gonna trade before that news event, which is in 10 minutes. Then I'm probably also gonna wait a half an hour. So maybe towards New York, I'm gonna look what happens. The only thing is that because we have a news event, things can change any minute. We can dump pretty hard or push really hard. So the analysis I now make, take it with a grain of salt, because it can get invalidated in a minute if we get big volatility. But let's say we do not get crazy volatility, then I'm simply looking for that weakness, take out the daily point of control, reject, preferably get a break of structure. And if we then find acceptance below it, I think this can be a good high of the day, and it will then go lower again. For the long idea, let's see, do I have a long idea? Quickly looking at these, we have open interest ramping up together with price, which is bullish into proven otherwise. And we also have some spot and CVT buying. So buyers are stepping in. So that's interesting. For longs, I'm not really interested in longs until we get back to that daily point of control, which we have down here, which is basically this zone. So depending on how we react, this is where I want to look for short. And depending on how we come back down, if we slowly get back into this daily point of control level, I could potentially see longs here, but I rather look for shorts and wait for longs till we reclaim like the range high. Then I'm going to be much more aggressive on longs. So that's the idea. But let's see what the news brings. It can of course change any minute. Then USDT, which is still stuck in the same situation we have been discussing the whole week, where we either get the continuation of this main internal bearish market structure, where this was a deep mitigation of that lower high, but it could still be the lower high for the lower low into the range low. And that's why also here you get those deep mitigations, but it can also be the case right now with BTC, where you get deep mitigation but still form the lower high. And they do that to, of course, manipulate us. So either we continue that bearish main pool, which makes sense because we still have the range low open. And the other thing is that we had the bullish tree drive right here, 1, 2, 3, bullish breakout structure, and since there basically have been in this uptrend with a local reaccumulation right here. So that is where buyers stepped in, and this can then be the higher low for the higher high. and then it breaks the downtrend, and then we have a confirmed uptrend. So basically the whole week we have been choppy, so the whole week we have been looking at the same, where we are constantly around an inflection point, and right now again. So either this demand zone, like we are now tapping into the refined demand, right here. Either this demand zone holds and creates the higher low to continue this local uptrend. If this demand fails to hold, then there's nothing to hold price up from going to the range low. And then we simply continue our bearish trend. Right now, to me, 50-50. So all depends how we react here. We have, like locally it looks, bears are locally pretty strong. We also created some supply. So I'm simply gonna observe how do we react. No point in guessing what's going to happen. Literally 50-50 here between the bearish continuation idea or the bullish continuation idea. So let's see what it will be. Thanks Abby, by the way. Quickly looking at the stats, because if we look at the daily, that one is probably now, I think, yeah, that's that one is now showing bullish price behavior. Because this is clearly not a bearish day, as you can see. So daily is bullish, and it's making quite a big move. So here we can see 66% of the days had the low in by now. 81% of the days put the high in later. So oftentimes when you are bullish, you make new highs during New York. So that shows 81% of the days make new highs. But you can see here 64% of the days put the high above the open, further above the open, which is not like a big edge, and it shows that we already made quite a big move to the upside for Thursdays. Usually like we are in the upper part of that, so could still, like upside could be limited, but what I'm more interested in is that weekly candle, which was more bearish this morning. Yeah, so the weekly candle, like neutral is this sideways one, bullish is that one, and bearish is this one. So if we look at it, is it following a bullish projection? Not really. It's hanging on the lower band, where it could still hold on, but then it's like that we either get like a neutral week or slightly bullish, but it so far still more behaving like a bearish day, a week. So then the idea of rejecting from the range high also aligns with continuation of this bearish trend on the weekly. So quite a lot of interesting confluences to look at. Let's put on here. Also, if I look at the uptrend right here, it's not super convincing with volume. Okay, we grinded higher on basically no volume, and right now we have a volume spike on this push, but yeah, let's see. To prove otherwise, or at least from a setup perspective, I think that is the only setup I like to play. And then target that low, kind of local peer tree. So that is the plan. Then we can quickly look at the alts. They have not really changed anything since the outlook the whole week. Monday we had that strong sell-off, where we knew that normally if you want this to be an accumulation range, then you don't want this of an aggressive move into your second tap, because then you don't have structure to break back to bullish. So there I said, from here already, we have to see if price can consolidate here and get like the supply mitigation and then move back, and then it's potentially still a range. Or if we cannot reclaim the range, this could simply be like lower high, lower low, lower high, lower low. Based on that plan, nothing has really changed because we are still consolidating here, not really doing anything. So the bias has not really changed. Locally we have now a new range where we can look at, but that's also not telling too much. So simply waiting here, and eventually it follows Bitcoin. So that's why I always pay way more attention to Bitcoin, because eventually the alt will just follow. So here I'm simply waiting to see what happens. Do we push into this supply project or not, or maybe get an accumulation, because we have 2 taps at the lows, but depends on what happens. Hype, simply bearish. There's like a lot of super big players are unstaking their hype and stuff, so there is some FUD going around, which is also adding to the sell pressure. But overall, I'm simply waiting for this range low to be taken out, and then we play it like a range, as we always do, to see, do we sweep the range low, then we can look for accumulation models, or do we break down aggressively. For now, main expectation is to just hold around here and then move up and then see what happens, and then we can look potentially for this to flow into an accumulation. It's way too early to speculate on that, but range low is always a big POI. However, locally, price is clearly showing a lot of weakness by the bulls, but a lot of strength by the bears, because this move is super aggressive, and also more locally, price is simply in a local downtrend here. So if I had to choose 2 POIs, it's here for short and at range low, simply to watch. So other than that, not really interested in hype. Tao was more interesting, but let's quickly look at BTC, because there is news in 10 seconds. So let's see what it will bring. So far, not much. Let's see, is gold doing anything on it? Okay, so gold is pushing a bit. Bitcoin didn't get the memo that there's news, it seems. Let's look at it here. It tells us a bit more about what is happening. So, does anyone know what the news is? It's probably what they predicted, or at least not anything too wild, because price is literally not doing anything. Yeah, well, okay, I'm happy with it, because that means that the analysis I just made is valid. Just gonna watch if we can consolidate here a bit, hopefully during New York, get that spike up. If we then break structure, I'm going to be interested in shorts, although this is not a high probability setup. My high probability setups are the distribution models like we played here, or potential reversal setups like here. This is more like kind of improved or improvised PO3 setup. So likelihood of it failing is bigger than trading a clean model. So keep that in mind. Then Tao is interesting because we had that 1, 2, 3, but here that super aggressive move into the third tab. So then you don't have any structure to break back to bullish. and that's what you always want, because if you do not have structure here to break back to bullish, you can also simply continue this as a downtrend. And eventually market structure tells you everything. So that's why I said, if I want to look for a trade, I want to have that pullback into extreme demand and then get a reaction from there, which we had. However, again, not with any structure. So then you can see price going up and hit your level and think, oh shit, I should have got in. But the only thing I look at is, was there a way to get in a valid trade? And it's the only thing that matters, is the valid trade. And here, if you look at this move down, like you can use 5-minute structure. That's in this case it might have worked, because you also had like 1, 2, 3, but that is way more risky, of course. And structure is eventually what matters, and I don't really see this as super clean structure, so then it's super risky to enter there. So the more important level is where price is now at. That is basically the bearish internal. So if you break that back to bullish, then you have a breaker structure, and then I will be interested in a potential higher low, which can come all the way back here, and then a move to the range high. And oftentimes that means that you have to wait a long time. High chance that you also miss out, but that is when eventually it becomes obvious, and that is where I want to get involved, when it's obvious. And that will be here. If we break now above it and then come back, then you will see it taps that demand, breaks internal structure back to bullish, and then you think, hey, this is obvious. And to me that's much more relaxed to get involved after it's obvious, than that you, for example, long it here and then all the time and watching the trade go against you and think, oh shit, I've bought the top, and then you get emotional, think, oh, I should close out. While in hindsight, and then maybe you think, oh, I'm gonna close my position, and in hindsight you see, oh shit, we had the breaker structure, price came back for demand, for refined demand, we broke internal back to bullish, so this was like a clean trade. But then you have to just have the patience to wait for that. So I'm now gonna put an alert a bit higher to see if we can break structure back to bullish. Right now it's not a break. And in this demand, what is it? Yeah, so the clean 30-minute demand. So if you come back for the 30-minute demand, that's a potential area I'm interested in longs. So that's the plan for Tao. If we do not break structure and we come back already, then I'm way more careful with going into longs. PCA numbers are as expected. Yeah, probably chart also kind of showed it. And then probably also the, what was the other, the jobless unemployment. That's probably also then as expected. I've never seen PC not moving at all, even if the actual numbers match. Yeah, it's actually pretty wild that it's doing nothing. You would not think that there was a news event seeing this price action. So yeah, what I'm mostly watching is just Bitcoin. If I'm gonna take a trade, probably going to be Bitcoin. But I want to quickly go over Virtual, because we were looking at it yesterday. And there I said, like, I never trade as during FOMC or just before or just after. Not on Bitcoin, but especially not on altcoins, because then it's even less predictable. But what we had, if I zoom at it out right now, then yesterday we had like this as the range. But in hindsight, I don't like that range at all, because here you pull it from low to high, but technically if you pull it from low to high right here, then price already broke out of your deviation threshold. Like here you wicked it, so on the downside, oh wait, if you go to the down, yeah, okay, then it's also kind of wicked it, but it's to the extreme point. What I like more is if you see it like low, lower high, lower low, lower high, lower low, and then have low, high, and start your range from there. So if we look at it from that point of view, then this is your range. And then you have kind of a model 1, step 1 sweep, slash a kind of model 1 slash range low deviation setup. So this is the cleaner way, in my opinion, to look at it. And then it also completed its model already. So the only thing I wanted to look at is, was there a entry confirmation, which probably, yeah, okay. So if we look at it from this perspective, you have 5-minute structure. Like here, low, lower high, lower low, break. So then this is your bullish break. But the way you come into your third tap is not ideal, because this is showing a lot of strength. But technically you reclaim it here. But then personally, I probably wouldn't have traded it. Let's see if the value area low. Yeah, only afterwards you reclaim your value area low. So at the moment of breaking it, your value area low is above. So then you could maybe have entered above, but most of your return to zone already was gone as well by this liquidity grab. So in hindsight it looks clean because you have your 1-2 deviation, but to get positioned in it was a tough one, at least a very hard one to trade. So yeah, probably would not have traded it myself. Bitcoin, okay. Then I saw you guys looking at OP. I haven't looked, or at least last week I looked at it, but I had it maybe on the Binance Square. Let's see. Oh yeah, this was it. The Binance, the Bybit pair looks much cleaner with the candles, so I'm gonna look at that one. You guys were looking at potential PO3, right? From where was it? Yeah. Oh shit. I think you guys looked at it from here, because we broke with low, lower high, lower low, and then technically here your SFP. So this is the, again, the local reversal setup, where you swing fill your market structure low, then you break structure back to bullish right here. And then indeed, technically you can pull your range from high to low. But what I said in the group as well is that you have to be very careful with failed accumulation models, and then still stay stuck to that accumulation idea. Because I've seen many times that if you have like tap 1, tap 2, tap 3, the moment you make a tap 4, more often than not, is that price continues to the downside instead of reversing. So you basically always want to have maximum 3 taps, and your 4th tap has to then be a higher low. If you keep taking the low after your 3rd tap, that's basically failed accumulation, and then it's more often than not bearish, in which you start a new bearish trend. So interproof and otherwise, this can just be a local bearish trend. Plus, you are creating supply here. So at least, personally, I want to see that be reclaimed. But the way I would personally draw it is probably from low to high, because we are in a high time frame uptrend. So locally, we indeed, like it's even 80 hours, even, okay, not the daily, but it's an 18-hour bullish break. So you can say you break 18-hour structure back to bullish, so then you have to pull it from high to low. But that is where time frames do not really matter. If you just zoom out like this, then are you here overall in a downtrend or in an uptrend locally? Well, if I see this, then I would just say you are in a downtrend, so we pull our range from low to high, and then it gets more interesting, because then we are potentially creating a second tap, but by the way price is coming down, it's super aggressive. But then I would more like look at it from potentially, if you can reclaim it, that this is a potential deviation in making. However, until proven otherwise, this looks super heavy to me. So I will not bet on it that this plays out, but it could happen eventually. Best case scenario is that you come up, take that supply, then come back down, and then form like your third tap. Either a model 2 or a new low, and then a model 1. Because what looks interesting is this return to zone, eventually to your range high. But the scary, or at least the dangerous part with these kind of charts is that they can look very attractive, but you also have to just see that if price is making new lows constantly, that's not without a reason. That is just, could just be crazy weakness. So it can look very attractive because the upside is like, what? I didn't even know it was this wild. God damn. Yeah, like it's not without a reason that price is at all-time lows. So trying to catch the bottom, it looks super attractive, but it's not without a reason. It's going into new lows almost every day. I remember the hype on Arbitrum and Optimism back in the days, literally at the highs. It promises to be the next generational stuff, I don't know what, and now we are at 98.3% down. Goddamn. So yeah, if you want to fight that trend, which is basically longing or buying, you have to have really clean reasons for that, because you are literally going against a crazy downtrend, and normally that's not wise to do. So yeah, I'm not super interested personally in OP. I'm more interested, I'm not sure how the Arbitrum chart is looking, but I think Arbitrum is much more promising than OP. OP is kind of dead. Arbitrum is, I think Arbitrum is going to win the battle, and it's probably that OP is going to die, and Arbitrum has more potential. So let's look quickly at this chart. Also massive downtrend. Let's see, could this be a range? It's kind of different, because normally I don't, yeah, this is a shitty chart, not even gonna pay attention to it. Yes, Astadi, that's what Arbitrum, I love Arbitrum. Low fees, and they have pretty big partnerships as well. So I think Arbitrum is going to win, but the problem with these layer 2 projects is how are they going to bring value to their own token. And oftentimes you pay in ARB, or like the Arbitrum project is very, very good, but they don't have a good tokenomics. So why would you buy their token? And they clearly did not figure that out, because the token is only going lower. So the project can be really good, but most of these coins don't even need a coin. And that's probably also the case for Arbitrum. So even though I think Arbitrum is very good, I have not done enough dive deep into the token itself if the token also benefits from more usage. I don't think so. Okay, so before I close it off, I think the ideas are pretty clean, mostly just in it short on BTC. And once again, it's an inflection point. So either reject from here, and then we have a potential to clear out all this liquidity again. Or if we flip it, then we reclaimed the range, and then the range is not valid anymore. And then we are simply going to continue our way into the range high, right there, to complete this model 1. However, if we look at the distance from the model 1 to 1, 2, 3, this is like shorter than the time we have spent trading here. So personally, I don't think we should or have to reach the range high from here. I think we could very well have our tab 1, this merge into tab 2, price potentially rejecting right here from the range again, form again lower highs and lower lows, and then get like our third tab right here, or like a PO3 kind of move, similar as we deviated the range high. Oftentimes if you deviate one side, price moves to the other side, and it won't go in an easy straight line, because otherwise people get easy moves. The same way as we came up was also with heavy moves down, up, heavy down, up, heavy down, just to wipe out all the insecure positions. The same can happen here, which we are basically already doing, because every time we come up pretty high, and right now we are doing the same. So interproven otherwise, I think this could still be that lower high for lower low. And to then maybe here stay below for a bit, and then have a deviation similar as that. But we have to see, plan is easily inflated as well if we simply break above last week's or this week's high. Then I think this is much more likely. So interesting levels. Let's see. Before the short, I want to see that daily point of control. I don't see a reason we, if we are bearish, to not take that and then go up. Let me look. Question from Astali. For the deviation threshold, shouldn't you look at it at the highest time frame where the range is visible? For the deviation threshold, shouldn't you look at it at the highest time frame where the range is visible? Yeah, technically it is, but I think you talk now about that example I gave for OP. But indeed, you can look at your market structure and where you first took on virtual. Yeah, technically you can look what are the, if you have your range low, range high. Yeah, okay, so let me give an example. here. So indeed, you look right here. What is the highest time frame pullback? So like here we have 2 up, 2 down. So on the 3 hour it's valid. We did not close below the deviation threshold, so this is valid deviation. But I don't really apply that too much. I more look at it from where is like the real range. And to me, this is just more like leading up into the range. And oftentimes you have this slow, weird move down, and then you get a range low, clear move up, clear range high, and then price starts rotating between those levels. Here you also don't have like a clean low and a high. So this, I will not say that this is your local range, like it's a super local, but zooming out, here you have clean range low, clean impulse higher, clean range high, and then price starts to rotate in between these levels. And then indeed you can watch, as long as you stay within your deviation threshold, it is valid to look at the tabs. But yeah, to me it's just look at what is the clean range. This is not a range to me. Same as like here we had, for example, a model 1. Then I will say range low, range high, and then you have a clear low, a clear high. Here you wick it, you stay within the deviation threshold, reclaim it. Tap 2, came back. Tap 3, it was a hard one to trade, but technically it was a model 1 accumulation. Was not really market structure to confirm the bullish pulse. Not at all. So I'm not sure where we reclaimed the fell. Yeah, so at this point you reclaim the fell. But then you can see that after this reaccumulation we had a pretty big expansion. But yeah, I'm not sure if that answers your question, but technically you can always draw your range and just see, do you close within your deviation threshold or not. And then you can indeed look at a higher time frame if it's a wick. But if I'm looking at the 5 minute or on the 4 hour to this range, the deviation threshold stays the same. So you can indeed go lower on the low time frame and think, oh, it's a wick. But if you reclaim it quickly, then it can indeed be just a wick on a higher time frame. But in general, often you do not really want to lose your deviation threshold at all. Okay, so we already have a New York high. But I want to see that, preferably that drive higher, take out that level and then reverse. Potentially if you want to look for scalps, this could simply be like kind of your internal continuation, where this is the level bulls want to hold price up. Okay, got it. Can you quickly look at ETH? Sure. For father always. Where's the chart? Okay, here. So we have that either our 1, 2, 3 model 1 distribution in which this can simply be the retest before lower, or market structure is in force, in which this is simply high, higher low, higher high, higher low, higher high, higher low, higher high. So it's the same situation as for BTC, where we are going to retest the range high, and that is either going to be where bears move price back down, or if we reclaim it, then simply continue. Locally, we had this range I was looking at yesterday. Where this is your local range with tap 1, tap 1, tap 2, tap 2. Then technically here, like a local, very local model 1, creating your third tap of the local accumulation model. It was a hard one to trade. Low, yeah, so technically here you broke kind of your structure, which gave that move into the range high, but that also directly was the third tap of the distribution. So you technically have like a model 2 here that directly flew over into a model 1, and both hit their targets very quickly. So clean range, but very low time frame and hard to trade. Right now, let's see. A very choppy price action here as well. We did tap into this supply. Yeah, I think I have no idea, to be honest. That's why I don't like to watch it eat. I don't know, with some coins I have a good feeling, with ETH I don't. Here was already mitigated as well. This is mitigated. So there's not too much reason to go above that mitigation from yesterday. We're now taking the highs. So not a really clean accumulation or anything here. So also here I think this can just be the overall lower high for lower low, technically. You know you can double click on the price bar to reset your chart. Price bar. Oh. So if I'm zoomed out, I don't know. Yeah, I have no idea, but I'm gonna look at it here, which could tell us some more. If it wants to load. Okay, so let's look. Here we took the highs, then we took the highs again. We broke down, took daily point of control. We have one daily point of control above us, which could still be taken. And then mainly liquidity to the downside. So purely looking at it from this perspective, I also think like lower makes more sense. But here are a few levels coming up. I don't know. I'm just gonna look at BTC and what BTC is going to do. ETH is going to do it with 1.5x volatility. But Bitcoin I have always a very good read on, not on ETH. So ETH is now doing something. So yeah, nothing much to say about it. Thanks. Thanks for tuning in, Mike. I also have to go. So I'm gonna stop the recording.